right, so this video, I'm going to be diving in just how I've traded my prop firm account, and I am doing rather well. I passed my evaluation with TradeAbot, or not TradeAbot, but Apex Trader Funding with the $25,000 TradeAbot account. And the first 7 days, I was pretty much at the $1,500 or $1,600 profit goal that they want you to have. I have decided to come over to prop firms knowing that there is, first off, the election season is upon us. So there is going to be volatility, risk, and everything, and just the market's going to react in certain ways that I don't like to trade in. So to save my capital, I have came over to prop firms. Prop firms, if you don't know what they are, I would say just highly look into them, figure out which one works best for you. I do have an affiliate account with Apex and BLUSKY. I've used BLUSKY, I've used Apex. I'm not going to go into full details because that's not what this video is about. But I went to Apex for the fact there's only one evaluation phase, not two. Unlike BLUSKY, however, BLUSKY, it does seem that second evaluation phase, that is your profit that you're working up towards, and that will be your money once you pass it. So it's pretty much the same as Apex. You do have to work up to, I think, 1,600 before you can pull out in 10 days. So in the end, it's all the same. But anyways, this specific video is going to be showing you and trying to explain my trading strategy that I've used to pass the evaluation. Now, the very first evaluation with Apex, I blew it out of the water, meaning I did well. I didn't blow my account. I literally passed it the first try around, and that's just because of the experience that I have with trading. I've been in the market since about 2012, 21, 22 time frame. I did have a crypto hedge fund. We traded rather well with that as well. And then just reasons being, I closed the hedge fund down. Government regulation in crypto, the U.S. government trying to fight everything there was to that they could possibly do to crash crypto. And, anyways, that's just the mere fact of why I got out. I am now trading oil futures. That is my go-to. I will go over to my oil futures account here in just a second. I did want to show you the Apex days that I've had. I've been in it for 8 days now. You know that we have to get to day 10 before we can actually pull profit. The first day was 113. The second day was 303, 206, 176, 213, 199, 203, and 346 just on Friday. You go to the chart, and I've literally just had a consistent uptrend, working my way up, slow as smooth, smooth as fast. I do not have a loss. Now, I'm not going to say in arrogance that I don't have a loss because I'm that good. I'm not saying that. I am limiting the amount of time and exposure that I am in the market. I run a couple of charts. This is going to be where it gets kind of more in depth and you got to pay attention. I do run 4 different charts. I have a screen off to my side or another monitor that I pull the smart money over. I leave the smart money on 3 minutes. Now I'm going to go over the settings and everything with you so that you can have the exact same chart setup that I use if you wish to do so. You'll go into the settings of Smart Money Concepts by Lux Algo, and I have Show Internal Structure. I have Show Swing Structure. And then here are the inputs. Show strong, weak, high, and low. Internal order blocks are set to 5. Equal high and lows at 3. This, 0.1. Label size don't really matter. I do have fair value gaps on. This is going to be critical when you get a more confirmation and confidence in your trading strategy on the direction that you're about to go into. Auto threshold is checked. And then down here, definitely make sure you have the premium discount zones checked as well. Premium zone is red, resistance. Discount zone support is green. Equilibrium is white or gray. All right. So I run the 3-minute time frame. To me, that is the only thing that I want to know in the time frame that I care about, because I am trading 15-second to 30-second candles. Now that will be a lot. Most of you will probably fail. High frequency trading like that, computers, algorithms, hedge funds, that's how they operate. Is so many trades within a day. They go for quantity and not big, huge gains unless they're swing trading. But when you look at the order books, you will see that there is thousands of trades or price orders going on at every second of the day while the market is open, and even pre and post market. But while you're trading, you have to understand that institutions drive the trends, price action, everything. You as a retail trader do not have enough contracts to do anything. Yes, in the bigger accounts, you have 14, 40, etc., micros, minis, etc. Those can affect the market, yes. But these hedge funds have hundreds, if not thousands, of contracts that they're working with. They do have issues with getting filled. They cannot be filled all at once, and that's why you should understand support and resistance zones, discount and premium zones, because those are the areas that we see on this chart where these orders are to be picked up at and let go at. Hedge funds sell off in premium, institutions sell off in premium zones, and then they buy back in discount zones. Supply and demand. They give up the shares here, then they allocate down here. When you understand wicks, those are in a sense, those are limit orders that have been placed. When you see a candle that drops like this and shoots back up, that's because a massive order has hit to pick it up here, and then it shoots back up here. So these are going to be your liquidity zones within these wicks and the bottoms of the candles. If you know that hedge funds cannot let go of all their shares or buy back all their shares at once, they do it in sequences. They do it in 2 or 3 orders at a time. That's why you see this one hit here. They bought down here at 75.91, 75.98, and then it kind of trended up. When I'm trading, I look, it's not going to show you because it's already past, or we're now in the present time. You're going to be seeing, first thing in the morning, equilibrium, discount, and premium. You may see smaller order areas or support areas pop up like you are now, and that is totally fine. Those will be definitely short-term support and resistance zones. I am looking as to where we're trending upwards to. If we are trending upwards out of the discount zone into equilibrium, I know that I can be buying, and going long. You have to trade according to the trend. Now, when I say have to, this is not financial advice or anything like that. This is me and how I teach and how I've traded. Doesn't mean you should duplicate that, replicate it, and do that and take it as financial advice. I'm saying that most traders do use price action to determine which way they're going, short or long. If we're going long, then why would you be shorting? I can short in a, believe it or not, in a bull market, because there are these liquidity zones that are being picked up. Now, I do use Heikin-Ashi to determine the overall trend and the average true range, and then I bounce back to, or these are Heikin-Ashi, sorry, and then bounce back to regular candles to see a little bit more perspective in supply and demand zones within candles. I don't even care. I mean, I do, where the ultimate supply and demand zones are, because I know that when I'm trading upwards, I can trade up to around this point, or maybe just under the equilibrium zone, which you can barely see right here in this gray block within the green block. I know that I could definitely probably put in a limit to sell order about right here, and it will most always hit. Now, I'm not saying take this and just run with it and start trading like this. You have to get a understanding and a feel for market waves and price action. Where there's always a bull run, there's going to be a drop, and then it takes off again, and then a drop, and then climbs on up, and then eventually fades out, consolidation periods, and then we start reversing the other direction. Whether the direction's all the way down, which you won't see typically, you do right here, but guess what? That was just to the equilibrium, then we took off again. You will see it drop to about right here. We'll fight back up, drop down, and maybe hit equilibrium again. We've only hit equilibrium about twice. This was a bull one, or a bear one, hence why we definitely saw that long short here, and then the bulls kicked in and took off again. And then we'll probably meet it again. Now, we're running, today is Sunday. If we start running through the equilibrium, then guess what? We will probably see a discount zone being met again, 75.96. Will that be Monday? Who knows? Will it happen? Probably. That's all I'm going to say is we will probably see 75.95 in oil prices again next week. Okay, this is just 3 minute though. However, the 3 minute, this is the zones that you typically average true range will trade within a couple of days to a day. If you go out in a longer time frame, it gives you different prices. That's because in the longer period, those are the zones that can be met as the days go on. These are hour bars, candles, so we know that within 3-4 days, we trade from 71 all the way up to 77. Okay? Back to the 3 minute chart. With our drawdown, we cannot take that long exposure because if you are wrong, your drawdown will be bust. Right here to here is literally $1.50. That's $1,500 with just one contract. You cannot do that. That's why I am focused on 30-second candles using a 3 minute smart money. Now I'm going to show you my other charts. Ichimoku. If you don't know what Ichimoku is, look it up. I will use this to see where we're headed in the longer trend. This was handy. This came in handy when I worked, when I owned, whatever, the hedge fund. This is how I traded with the Ichimoku cloud and the lagging span line. I could tell where we were headed in a more of a swing trade, a week or two, maybe a few days into the future, and then I would kind of trade based off the pattern of coming back down after we had a nice bull run, wait for the bear market to hit, come back and start taking off again. Okay, so I do use this, not as much, but I do kind of gauge and use this as a second confirmation is to understand where we're headed. This is the one I trade off of, ATR. I'm going to go over this with you. ATR buy sell alerts. What are my setups? Sensitivity value, 3. ATR period, 2. Signals from Heiken Ashi candles. Linear regression candles, 7 and 11. 7-11. Simple MA is checked. Linear regression is checked. Order block detector, 5, 3, 3, 1. You can change your style however you want to. This is giving me these order blocks. These are the green zones, just like you've seen on this smart money. These are support and resistance zones. Then I do have the auto trend lines, which is provided by TradingView. It just came out a couple weeks ago. 3, 2, 2. I don't think I really changed anything. These should be the defaults. This just gives you trend lines, right? They do help. Don't solely base your trades off this, because as you can see, this dropped below it. Now we're going above it, and it kind of did the opposite of two different things. But right here, it traded within the channel. Here it traded within the longer channel, and so on and so on. And then TTD, which is this little table over here. You can barely see it, but these give the green light on all of the time frames. This comes in handy to give a better confirmation. If I'm maybe not so confident in the market direction, I will tend to look over here and see where we're going. Red's the only red day. I mean, the daily time frame is the only red. That means I would typically be doing buys. Okay, 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, and 4 hour is all showing that we're green. This is based on the EMA 9 and 21. Here's my settings. Trend identification approach, comparison of the two EMAs. EMA length 9, additional EMA length 21. And then I have, you can change this. Matter of fact, if I put this to 3 minute, this will give me another 3 minute time frame, and then you can choose the ones you want to see. I'm going to leave that. I'm going to save that because I want my 3 minute showing. So now for the nitty gritty of getting into the trading when you're using this chart. There's one more chart I do have. It's the Algo Pro. It gives the percentages of the win losses based on whether it's all buys and sells. I can sometimes use this. It is an additional fee. I think it's like $1.99. You buy it and you got it. They update it all the time. I will kind of use this to also see where it's giving me bullish or bearish time frames. But the 99% of the time I'm trading with this chart right here and the smart money. I will bounce between Heikin-Ashi and regular candles because I need to see the liquidity zones for the quick time frame. This is set to 1 minute. If I'm in a 1 minute buy, then I should technically only be doing buy long orders. However, my MACD that I've edited, revised, customized gives me the second and third confirmations of how I should be looking at the wave and the price action of the trends. MACD, moving average, convergence, divergence. We know that when we have huge crossovers at the high tops, those are usually bigger reversals. And also the same thing when you have a huge rubber band effect, a big gap within your lines on your MACD, you cross over and your green dot's typically right. You know, I like to see it down here, but when there's a huge drop like this, your reaction is usually also powerful. And then as you start getting more and more flatline, you don't really have much price action. You just have sideways consolidation periods. But like this was a nice buy opportunity. Would I have got in right here though? This is showing we're coming up out of the bottom. We're starting to lap over the waves above the line on our, I'm going to show you these real quick. These are the WTLB. These are by TradingView as well. Here's all the inputs. You can pause this, see what I have. These are, I think, defaulted, but just in case, make sure you have these. And then your stochastic momentum, another good one to use. Here's the inputs for it, 10, 3, 40, and negative 40. So it does seem like a lot, but I'm using each one of these in a rapid approach to kind of see the wave action of the ultimate asset and the price action, the flow. All right, what goes up must come down, what goes down must come up. If I'm seeing stuff like this, I'm probably going to be out of it until I see something like this. And then I'm going to be waiting to go long, or I'm going to be going short. Because I know when there's huge, quick bumps, I mean, this literally went from 76.58 up to 76.98. So that's 40 points right there, 40 ticks. Guess what? We're going to have a nice little reversal. I usually guesstimate 25 to 30%, but in case it continues dropping, you're going to be watching your smart money and seeing where we're at, where the resistance is at on the smart money. If the equilibrium was here, right? 76.50, and we bounced off 70. Guess what? 76.50. I would have probably said, okay, I can go ahead and chase this down a little bit further and go ahead and hit 76.50, and then I'm done. And then I'm waiting for it to go back up. And then I'm waiting to see when we're trending downwards towards the equilibrium again. So like right here, we're up here at 76.96, 76.98. Right here at 77.01. This is ATR, or this is Heikin-Ashi with ATR. So we have to go to regular candles to get the actual price. It's a little delayed on. So we're at 76.98 right here. So I know there's some support right here, 76.93. That's 5 points. You could potentially, look at this. Everything's pointing possibly to a crossover on the MACD. We're bouncing off the red line up here, and then we got some red with about the crossover right here. I could chase this for 5 points. Would I? I mean, you're literally just coming off the week high, the premium zone. You got 76.80, so you still have 18 points, which is down here. So if it breaks through this one, I'm going to pick up my trading strategy. I would trade from 76.90 down to the 76.80. So I would wait for this one to be broke just to make sure, and then I would trade that 4 ticks right here. When you look at 30 seconds and 15 seconds, it becomes a little bit more rapid. And when I say that, it's because you're trading high frequency almost manually. Well, you are trading manually versus the hedge fund. So it's you against the hedge funds. However, I look and I'm like, okay, there's a wick right here. These are consolidations. I'm seeing right here. This big sell-off was right here, and then we kind of reverse. So I know instantaneously when I'm looking at this, I started looking for wicks, candles with wicks right here. Boom. Okay, so guess where this is at? 76.90. What did I say? I'm going to be trading 76. Where's the 76.90 at? Right here? Right here. So if we break, we know we have the 76.80. So I go back to 30 seconds. If we break this wick, you got down to here to trade. So it would be breaking through these support zones. We got massive volume right here. This was a good candle. We got to have one more, maybe 2 more to break this, and then you're going to see a drop down to 76.80. It's almost evident because you have this. This is liquidity zones. You're going to come down to those. Those are within the order books that hedge funds have sold off of. We've got this compared to this one. We're already down here. This one wasn't a huge one, so it may bounce, come up a little bit, and then you're going to see it drop to 76.80. I can almost, I don't want to say almost guarantee, but I've been doing this so long, I know that hedge funds will also bring their limit orders down a little bit to fake out the buys. The buys are thinking, oh, we're just, traders that don't know what they're doing. They're going to come up here and they're going to try to buy in this little trend or this trend right here, and then, we're going to come back down here. Depending on your trend, or if you're a swing trader or a micro, high frequency trader, that's up to you. Yes, you can trade long-term 5-minute up to here. But when you're in these for 30 seconds, I'm looking for stuff like this to come down, and boom, I just made my 4 ticks. 4 contracts, that's $160. I'm just done. Boom. Next time, I'm back in it again. Boom. 320, another 160. Boom, back in it again. 480, so on and so on throughout the day. That's if you're doing 4 contracts. I typically, depending on the size of account, I want to slowly grow to build enough cushion, and then I can start taking more contracts and making more money. So to limit your drawdown, I have realized I do best with staying in the market for a shorter amount of time. I don't focus on trying to be correct for the longer game. I'm in it for, boom, a little candle, in and out, in and out. I was a hedge fund owner, so that's how I traded. You have to understand that. You have to adjust to whatever works best for you. This is how I've done it. This is why I'm sharing this. And so if you do need help, feel free to write it in the comments, reach out to me. I do have a Patreon group. I've got a Discord group. Put it in the comments and ask. That's all I want you to do, is trade with what works best for you. I can't stress that enough. I've had students, I've had clients that come to me and I teach one way and then they end up changing a little bit and they do better. That's totally fine. Being a mentor is to simply help you discover quicker what works best for you, not 10 years later. You need to start making money now. I use trading as primary income, an inflationary tool to beat inflation. We've got a society where things are continually rising in cost, more so than ever, and it's nice to have a cushion in your finances to be able to afford things and to do things that you want in life and enjoy. So that's enough for this video. Please reach out for any questions that you may have, any help that you want, reach out to me, and I'll see you in the next video.